on the phone NYU Professor Ann Lee, author of What the U.S. Can Learn from China. Welcome to the program, Ann.
Thanks for having me.
So now I don't know terribly much about China. I do know that there have been news reports that their economy is in a very bad place now, and people seem to consider that to be largely problematic for the rest of the world. Give us a sense of what's going on in broad strokes in terms of the Chinese economy.
Well, it has slowed a little bit. The latest reports about their imports and exports show that they were down about 8%, which was worse than what people expected. But I think the media reports that the economy is in big trouble is really exaggerated. This is an economy that has been growing for over 30 years, straight up, in for the most part in double-digit growth, and in the last few years at 7%, and maybe drifting a little lower to below 7 this year. But this is extremely strong. I mean, in the best of worlds for the U.S., I mean, we were, considering our economy strong at 4%. And so, the new normal for China is still amazingly high growth rate. And for an economy that large, because it's the second largest economy in the world at such a high growth rate, I think it is fair to say that it's slow, but it's not in trouble. And so this doesn't spell bad news for the rest of the world. In fact, it could be great news for the rest of the world because they're transitioning into a consumer-driven economy where consumer-driven consumption and services are finally becoming a larger part of their GDP. Over 50% is in services now, which means that other countries can export to China, and that could be a destination for exports as opposed to the U.S. playing that role alone. And so this is, I think, great news, a story that's not really shared in the media. I think that when people talk about China, they tend to exaggerate it because so few people in the States have visited China, so they don't know what to believe. And when you create anxiety and fear, it creates volatility in stock markets and currency markets, and this is good news for Wall Street traders, but that's not necessarily an accurate picture.
So, okay. So, I mean, is that why, and I want to get back to sort of the way that the economy is changing from sort of an export based economy to one that actually, a lot of the spending actually happens and the sales end up happening to their own sort of domestic market. But, I mean, why is it that when the idea that Chinese growth will slow, why is there this reaction? Is it simply because of that volatility? I mean, because I could also add to all of the sort of the economic factors you're talking about, why that might be a positive thing. It's also sort of, it seems to me, at least somewhat positive in terms of climate change. Because I mean, theoretically, that growth is also in many respects is arguably costing the planet a little bit as well.
Yeah, I mean, I think this is a healthy transition, and I've said on other news shows that, economy can't grow at super high rates forever. It's just not sustainable. And every economy sort of has growth spurts and slows down, including the U.S. And so China is just having a slower patch right now, but that doesn't mean that the economy is in danger. And why people make a big deal out of it, I wonder sometimes, people might have, sort of their own political agendas about talking down China, sort of denying their successes, because it's convenient for their other political purposes. And so, I can't speculate on all the reasons why, some people would spin it in a certain negative way. But, this is starting to be another presidential season where candidates, need to figure out who can be a punching bag, and China has always been the perennial favorite lately, and so they'll use any excuse to try to say, there's something wrong going on there, and blame that country for what's going on.
I mean, the interesting thing to me is that part of what we're seeing, at least to the extent that we've seen China come up in the presidential elections so far, is they are an all-knowing, very cunning. I mean, I think this is what Donald Trump has said. Like, they're running circles around us and are leaving us in the dust. I mean, I don't know what all of that's supposed to necessarily mean when you actually talk about real things, but that's sort of the imagery that he's trying to evoke. When the Chinese economy slows down, or actually, more importantly, sort of turns at least inward in terms of it functions as much on domestic consumer spending as it does on exporting, or at least that proportion begins to come closer to 1-to-1. What are the implications for the U.S.? What are the implications for the rest of the world?
The implications for the U.S. is that, China is no longer a place for Fortune 500 companies to get cheap manufacturing. So companies already have started outsourcing to other places like Vietnam or Mexico instead of China to do their manufacturing. They basically have seen that, the labor wages are too high there. So instead of using them for the back end, they're actually selling goods to them because there's a growing middle class in China. They're spending more. And so this becomes a great destination for exports, not only for the U.S. companies, but for the entire world. And so this can really pull a lot of economies out of the doldrums. And, it's up to those countries to take advantage of that. And I think that also with a growing middle class in China, it means that they're going to not only buy American goods, but they're also going to be traveling more abroad, and they can spend their tourist dollars here in the U.S. also. And so that also spells not only, economic potential, not just for exporting industries, but also in the domestic industries, restaurants and other places where tourists want to spend their money.
And what of the currency manipulation? I mean, the devaluing of their currency. I guess it was a couple of weeks ago now. Give me your sense of is it as problematic as we are led to believe in this country? And what are going to be the implications in terms of how does that impact, let's say, our exports to China?
First of all, I think that currency manipulation is complete misnomer because all these talks about currency wars really started here in the U.S. when the Federal Reserve decided to engage in quantitative easing right after the financial crisis. They were the first to create the currency war because all that money printing caused the U.S. dollar to fall dramatically as soon as the Fed engaged in that activity. And the rest of the world couldn't handle that kind of pressure, and so everyone else followed suit. So the euro basically depreciated. Also, they cut their interest rates to even negative rates. Japan depreciated their currency significantly. China literally was the last one standing with no currency depreciation, and they were actually appreciating against all their major partners, as much as 60% appreciation. And this, frankly, has hurt China's exports significantly. But even, with this giant appreciation of China's currency, they were still able to gain share in trade. So they demonstrate in real world terms that prices are not the only thing that determine trade competitiveness. There are so many other things that will, give a company or a country an edge, such as their productivity, the quality of what they're exporting, and so many other factors. And so actually China was doing quite the opposite. They were not engaging in currency manipulation, and what they're doing here is that it's what the U.S. has been asking them to do all along, which is to let the currency follow the market forces more. And the market for the Chinese yuan actually had been falling. The spot market for where the currency trades was below where the policymakers are trying to prop it up. And they finally said, well, there's so much pressure for it to go down because of the weak economic numbers coming out of China that they said, okay, we'll just let it drop a little bit. So, 2% fall, in those last couple of days, it is nothing compared to the extreme appreciation it had experienced in the last few years since the credit crisis. And so that's really not going to put a dent on any country's exports competitiveness against China. It would take a much more dramatic fall of China's currency to really affect its trading partners. But at this rate, I think it's more just a signal that they're sending as opposed to having any material effect.
And let me ask you this in terms of, when we hear about economic numbers, I think it was Paul Krugman the other day wrote that most economic statistics are at best partially fiction, and he's suggesting that Chinese numbers are also sort of rather fictional. Just we don't have any type of real sense of what's going on. They don't necessarily have the most transparent, and I would argue to a certain extent, neither do we. But theirs are less transparent. Give me your take on that perspective.
My perspective is it takes one to know one, and for Krugman to accuse China's numbers as being fiction, all you need to do is just look at U.S. numbers to know that ours is practically no different. A lot of the numbers that come out of our statistics have been manipulated by economists as well, because when you look at where the consumer price inflation indices and all that, if something in the indice is higher than normal, they basically substitute it with something else, what they call a comparable. So if Apple prices were showing inflation and they don't want to let everyone know that there's really inflation going on, they substitute apples for, pears for apples.
Right.
And so, we do just as much manipulation on our statistics as, any other country. And so, if you're talking about apples to apples, I don't think that the Chinese numbers are so much worse. And in fact, there are plenty of American companies that track Chinese numbers as well, doing their own independent research, polling CEOs of, thousands of companies around China. And frankly, the numbers that they report, whether it's the Beige Book or some other groups that track Chinese economic numbers, they're basically saying that, whatever the China government is reporting is actually pretty on target to their own results. So, I don't think that the numbers are terribly off. I mean, yes, there can be variations here and there, but for the most part, I think the Chinese government numbers are as true as it can possibly be.
I know we don't have too much time here, but let me just ask you a couple other questions so that we all have as you say, I think we're going to hear a lot more about China in the coming elections in this country, just because I think that seems to be what Donald Trump wants to talk about. So everybody ends up talking about it. One of the stories I've been seeing quite a bit recently is that Xi Jinping, the Chinese president, has been, or I guess there have been a lot of corruption cases. I don't know, maybe a lot but there have been some corruption cases of note in the higher echelons of the Chinese government. I'm curious what accounts for that. I mean, I got to presume is it. I presume it's not a rash of new corruption necessarily, but rather an attempt to crack down on corruption. Is that a function of Xi Jinping looking to get rid of political competition, or is that a function of trying to, I guess, project a certain perspective to the rest of the world in terms of looking for investment?
I think he's accomplishing both. He wants to send a message to the Chinese public as well as folks abroad that they're serious about trying to clean up corruption in China. And conveniently, it can also serve as a way to get rid of political opponents at the same time. So I think that there was a little bit of both that was going on. And it was a necessary step because before Xi Jinping took power, there was widespread cynicism and, perception amongst even the Chinese that the high government officials were above the law. They were too privileged to be touched and they can get away with everything. And that was going to hurt the credibility of the government, and they knew that they couldn't stay in power if that was going to be widespread enough and people were, too cynical to listen to them. And so he needed to act forcefully because the previous administration, if they ever cracked down on people, it was just on lower level government officials. And so there was a common saying where they said, the people, they just swat the flies, but they leave the tigers, running loose. Meaning that, the powerful ones get away and only the small guys get, hurt. And so Xi Jinping turned that all around by going after a lot of the big tigers, namely the high government officials that were caught in various scandals. And this actually, lifted the spirits of the common people in China, as well as basically sort of put a lid on corruption because all the government officials were, frankly, finally fearful that they would be next. And so it really served two purposes there.
I feel like the swatting the flies and leaving the tigers alone could have application in our society, but that's a different question. So let me ask you lastly. I mean, does Xi Jinping are when we talk about his political rivals is and the idea of sort of I guess good government on some level is what he's talking about here. In weeding out corruption and laying down the law, as it were, and saying that no one is above the law, at least to the extent that he's doing that. Are his rivals? I mean, is there an ideological divide, or is it simply, sort of standard fare politics and maybe some measure of, we need to impose a certain level of technocratic legitimacy to this government to maintain our political power, or is there any type of ideological differences within the Communist Party?
There are going to be differences in all sorts of things. When you have a Communist Party that is at least 80 million members, everyone is going to have their own opinion, clearly. And especially the people in the Politburo and above, they're going to all, be jockeying for power. And the ideological differences usually are no different than for any other country. It's usually the haves versus the have-nots. It's the age-old problem forever in human history. And you have it in China very clearly because you have very rich cities along the coast, and you have the poor peasant folks on the west part of China, and they're going to have very different needs and want very different things. Clearly, the poor people, would want more welfare. They would want more help. The rich people don't want to be taxed more. So it's the same struggles that any other country is going to be faced with, and those are the same debates and that go on in China.
Interesting. Well, Ann Lee, NYU professor, author of the book "What the U.S. Can Learn from China." Thanks so much for your time today. Genuinely appreciate it.